Right now, something is unfolding around XRP that many people were waiting for, but very few expected to happen this quickly. And if you are paying attention to the signals coming from Japan, the political shift around Donald Trump, and the quiet movements connected to BlackRock, you may start to realize that this is not just another cycle of hype, but a possible turning point that could reshape how XRP is viewed in the global financial system. And the most important part is that the majority of retail investors still do not fully understand what is happening behind the scenes, which means the window of opportunity may not stay open for long. The current situation around XRP is starting to attract serious attention because multiple powerful factors are slowly aligning at the same time. And when that happens in financial markets, it usually leads to strong momentum shifts that can change price direction very quickly. One of the biggest signals right now is coming from Japan, a country that has always been ahead when it comes to adopting crypto in a regulated and structured way. And XRP has historically had a very strong relationship with the Japanese financial system. Major financial institutions in Japan have supported XRP for years, and the idea of using it for cross border payments is not something new there. But what is different now is the scale and seriousness of integration being discussed. At the same time, the political environment in the United States is starting to shift again, and the possibility of Donald Trump returning to power is creating new expectations in the crypto market. During previous discussions, Trump's stance on financial systems and control over currency hinted at a more strategic approach toward digital assets. And investors are now trying to understand what a Trump led administration could mean for XRP, especially when it comes to regulation and global financial positioning. If regulations become clearer or more favorable, XRP could benefit directly because one of the biggest obstacles it has faced over the years has been uncertainty, not technology. Now, when you add BlackRock into the picture, things become even more interesting because this is not just another company entering the conversation. This is one of the largest asset managers in the world. And when institutions of that level start moving in a specific direction, it usually means they see long term value rather than short term speculation. Even though there has not been a direct and confirmed full scale move into XRP specifically, the broader involvement of BlackRock in crypto signals a shift where institutional money is becoming more comfortable with digital assets, and XRP being designed for real world financial use naturally becomes part of that discussion. When you combine these three elements, Japan's adoption strength, potential political changes in the United States, and institutional interest from firms like BlackRock, you start to see a pattern forming that goes beyond normal market noise. This is why many analysts are beginning to say that XRP might be entering a phase where its real utility could finally start reflecting in its market value rather than being driven purely by speculation and news cycles. Another important factor that many people are ignoring is timing, because in financial markets, timing is often more important than the event itself. Even strong fundamentals can stay unnoticed for a long time, but when the right narrative forms at the right moment, everything can move very quickly. And right now, the narrative around XRP is slowly shifting from uncertainty to possibility. That shift is what experienced investors watch closely because it often comes before major price action. What makes this situation even more interesting is that retail investors are still divided, with some believing XRP has already missed its chance, while others think the real move has not even started yet. And this difference in opinion is exactly what creates opportunities in the market. When everyone agrees, the move is usually already over, but when there is confusion, that is where positioning begins. So the real question now is not whether XRP is active again, because clearly it is, but whether these global signals from Japan, the potential influence of Trump, and the institutional direction of BlackRock are coming together to trigger something much bigger than what we have seen before. And if that is the case, then the next phase for XRP might not look like anything we have seen in the past cycles. We will go deeper into what exactly is happening in Japan and why that piece of the puzzle could be more important than most people think right now. When we focus closely on Japan, the situation becomes much clearer and far more important than most people realize, because Japan is not just another country experimenting with crypto. It is one of the few major economies that has built a structured and regulated environment where digital assets can actually function alongside traditional banking systems. And this is exactly where XRP has always had a strong advantage compared to many other cryptocurrencies that are still searching for real world use cases. Japan's financial system has a long history of being open to innovation while still maintaining strict regulatory oversight. And this balance is what allows institutions to confidently explore technologies like XRP without facing the kind of uncertainty that has slowed adoption in other regions, especially in the United States. Over the years, XRP has built deep connections with Japanese financial institutions, and these relationships are not based on speculation or hype, but on real discussions about improving cross border payments, reducing transaction costs, and increasing efficiency in global money transfers. One of the key reasons XRP fits so well into Japan's financial vision is because it is designed to act as a bridge currency, meaning it can connect different fiat currencies quickly and at a much lower cost compared to traditional systems. And for a country like Japan that relies heavily on international trade and cross border transactions, this kind of solution is not just useful, it is extremely valuable. Banks and financial companies are always looking for ways to move money faster and cheaper. And XRP offers a solution that directly addresses that need. Now, what makes the current moment different is not just the existence of this relationship, but the growing confidence around actually implementing these solutions on a larger scale. There have been increasing discussions about expanding blockchain based payment systems, and XRP is often at the center of those conversations because it has already been tested in real financial environments. This is not a theoretical technology for Japan. It is something that has been studied, tested, and in some cases already integrated into pilot programs. Another important aspect to understand is how regulation plays a role in all of this. In Japan, regulators have taken a clearer stance on cryptocurrencies compared to many other countries, and this clarity gives institutions the confidence to move forward. When companies know the rules, they are more willing to invest time and resources into building systems around those rules. And XRP benefits from this because it is one of the few digital assets that has been consistently positioned as a utility focused asset rather than just a speculative one. This is where the difference between short term hype and long term adoption becomes very clear. While many cryptocurrencies rise and fall based on market sentiment and social media trends, XRP's strength has always been tied to its potential use in real financial systems, and Japan is one of the strongest examples of where that potential could actually become reality. If large scale adoption begins in a country like Japan, it can create a ripple effect that encourages other countries to follow, especially those that are already exploring digital payment solutions. There is also a psychological factor in the market that should not be ignored. When investors see a major economy like Japan taking serious steps toward integrating a specific technology, it increases confidence globally. And that confidence can translate into increased demand. Markets are not driven only by facts, they are also driven by perception. And right now, the perception around XRP in Japan is becoming increasingly positive. At the same time, this development is happening while other major factors are also shifting globally, which adds even more weight to the situation. If Japan begins to move more aggressively toward XRP adoption, while political changes are taking place in the United States and institutional interest is growing, it creates a scenario where multiple forces are pushing in the same direction, and that is when markets tend to react the strongest. However, it is also important to stay realistic and understand that adoption does not happen overnight. Even in a forward thinking country like Japan, large financial changes take time, testing, and careful implementation. But what matters most is the direction, not the speed. And right now, the direction seems to be moving toward greater acceptance and integration of XRP into real financial systems. So when people say that something is happening with XRP, Japan is one of the biggest reasons behind that statement because it represents a real world use case that is slowly moving from theory into action. And once that transition begins at scale, it can change how the entire market values XRP. We will look at the political side of this situation and break down how a possible return of Trump could impact XRP and the broader crypto market in ways that many people are not fully considering yet. Now, when we shift focus to the political side, the conversation becomes even more serious because a siasa often plays a bigger role in financial markets than most people expect. And the possible return of Donald Trump is creating a new layer of speculation around crypto regulations, financial control, and how digital assets like XRP could be positioned in the future global economy. This is not just about opinions or headlines, this is about how policy decisions can directly influence market direction, investor confidence, and long term adoption. In the past, the biggest challenge for XRP in the United States has not been technology or demand, but regulatory uncertainty, especially during the high profile legal battle between Ripple and the US Securities and Exchange Commission. That case created fear among investors, slowed down institutional involvement, and caused many exchanges and companies to step back from XRP, even though its underlying use case remains strong. So, when we talk about political change, what we are really talking about is the possibility of clarity replacing uncertainty. If Trump returns to power, many analysts believe that his administration could take a different approach toward financial systems and digital assets, focusing more on competition, economic strength, and reducing reliance on traditional global systems that are slow and expensive. While Trump has previously expressed mixed views on crypto, the broader environment around him has evolved, and there is now much more awareness about how blockchain technology can be used as a strategic tool rather than just a speculative market. One important thing to understand is that political leaders do not act in isolation. They are influenced by advisors, economic conditions, and global competition. And right now, countries around the world are exploring digital currencies and faster payment systems. If the United States wants to remain competitive, it cannot ignore technologies that improve financial efficiency. And this is where XRP could come back into the conversation as a practical solution rather than just a controversial asset. Another key factor is how regulation could change under a new administration. Clear and fair regulations do not just protect investors, they also encourage innovation because companies know what is allowed and what is not. If the regulatory environment becomes more supportive or at least more predictable, institutions that were previously hesitant may start to re enter the market, and XRP could benefit directly because it already has a strong foundation in terms of use case and global connections. There is also a strong connection between politics and institutional money. Large firms do not just look at technology, they look at risk, and regulatory clarity reduces that risk significantly. If policies begin to shift in a way that supports digital assets, it could open the door for major financial players to engage more deeply with cryptocurrencies, including XRP. This is where the political narrative connects directly with the institutional narrative, and together they can create powerful momentum. At the same time, it is important to avoid unrealistic expectations. Even if Trump returns and even if policies become more favorable, change will not happen instantly. Government systems move slowly, and major financial shifts require careful planning and coordination. However, markets often react to expectations before the actual changes take place, which means that even the possibility of a more crypto friendly environment can influence price movement and investor behavior. What makes the current situation unique is that this political shift is happening at the same time as other strong signals are emerging globally. Japan is moving toward adoption. Institutions are increasing their involvement in crypto. And now the political landscape in the United States could also begin to shift. When multiple independent factors start pointing in the same direction, it increases the probability of a larger market move because the narrative becomes stronger and more convincing. There is also a psychological shift happening among investors. For a long time, XRP was seen as an asset facing too many challenges, especially because of regulatory pressure in the United States. But now that narrative is slowly changing. People are starting to see XRP not as a problem, but as a solution that was temporarily held back by uncertainty. And if that uncertainty begins to fade, the perception of value can change very quickly. So, the real impact of Trump's potential return is not just about one person or one policy. It is about the possibility of a broader shift in how digital assets are treated in the United States. And if that shift happens in alignment with global adoption trends, it could create a powerful environment for XRP to grow both in utility and market value. We will connect all of this with institutional power and take a closer look at how companies like BlackRock are influencing the crypto space and why their involvement could be a major signal for what might come next for XRP. Now, when we bring institutional power into the picture, the conversation reaches a completely different level because this is where real capital, long term strategy, and global influence start to shape the direction of markets, and the involvement of firms like BlackRock is one of the strongest signals that the crypto space is no longer being ignored by traditional finance. This is not about small investors trying to catch the next trend. This is about some of the largest financial players in the world positioning themselves for what they believe will be the future of money. BlackRock manages trillions of dollars in assets, and a company of that size does not move randomly or based on hype. Every step is calculated, researched, and aligned with long term goals. Over the past few years, BlackRock has slowly increased its involvement in the crypto sector, especially through Bitcoin related products and discussions around digital asset infrastructure. And while XRP has not been directly confirmed as a primary focus, the broader shift toward crypto by such institutions creates an environment where utility driven assets like XRP naturally gain attention. The key point here is not whether BlackRock is buying XRP right now, but what their behavior represents for the entire market. When institutions begin to take crypto seriously, it validates the space in a way that retail enthusiasm alone never could. For years, crypto was seen as risky, unregulated, and uncertain, but institutional involvement changes that perception because it signals confidence, stability, and long term potential. This shift in perception is critical for assets like XRP that are designed to integrate with real financial systems. Another important aspect to understand is how institutions think differently from retail investors. Retail investors often focus on short term price movements, quick profits, and market hype, while institutions focus on infrastructure, scalability, and real world application. XRP fits well into that second category because its primary purpose is to improve cross border payments and financial efficiency, which are problems that large institutions are actively trying to solve. This alignment between XRP's utility and institutional needs is what makes the current situation so interesting. At the same time, institutions require one thing above all else before they commit significant capital, and that is clarity. They need clear regulations, stable environments, and predictable outcomes. This is where everything starts to connect again. Because if political changes in the United States lead to better regulatory clarity, and if countries like Japan continue to push forward with adoption, it creates the kind of environment that institutions are comfortable entering. In other words, the groundwork for institutional involvement is not built overnight, but right now, that groundwork seems to be forming. There is also a strategic angle that many people overlook. Institutions are not just looking at what is popular today, they are looking at what will be essential tomorrow. Cross border payments are still slow and expensive in many parts of the world, and improving that system is a massive opportunity. XRP's design directly targets that problem, and if institutions decide that blockchain based solutions are the future of global payments, then assets that are already built for that purpose could become extremely valuable. Another layer to consider is how institutional participation can affect market behavior. When large players enter a market, they bring liquidity, stability, and influence, and this often leads to more sustained growth rather than short term spikes. Retail driven markets can be very volatile because they are influenced by emotions and trends, but institutional involvement tends to smooth out those movements over time and create stronger support levels. This does not mean prices only go up, but it does mean that the structure of the market becomes more mature. What makes this moment particularly important is that institutional interest is rising at the same time as other major factors are aligning. Japan is moving toward real world use cases. The political environment in the United States could shift toward clarity, and now institutions are showing increased willingness to engage with digital assets. Each of these factors alone would be significant, but together they create a much stronger narrative that the market cannot easily ignore. However, it is also important to remain realistic and avoid assuming that institutional involvement will automatically lead to immediate price explosions. Institutions move carefully, and their strategies are often long term. They may enter the market gradually, build positions over time, and focus on infrastructure before price appreciation becomes visible. This means that while the foundation may be forming now, the full impact could take time to develop. Still, the presence of players like BlackRock sends a clear message that the crypto market is evolving, and XRP, with its focus on real financial use, is in a position where it could benefit from that evolution if the conditions continue to align. The combination of utility, global interest, and institutional attention is what creates the possibility of a major shift, not just in price, but in how XRP is viewed within the broader financial system. We will connect all these elements together and break down what this could realistically mean for XRP moving forward, while also understanding the risks and why it is important to stay cautious even when everything seems to be lining up. Now, when we connect all the pieces together, the situation becomes much clearer and at the same time much more serious, because what we are seeing is not just one isolated development, but a combination of multiple powerful forces that are slowly aligning around XRP. And when markets reach this kind of alignment, it often leads to moments that define the next phase of an asset's journey. Japan is moving toward real world adoption. The possible return of Donald Trump could reshape the regulatory environment in the United States. And institutions like BlackRock are signaling that crypto is becoming part of the long term financial system. And when all of these factors come together, it creates a narrative that is difficult for the market to ignore. However, it is very important to understand that a strong narrative does not guarantee immediate results. And this is where many investors make mistakes by expecting instant price explosions without considering how markets actually move. Even when everything seems to be lining up perfectly, price action can take time because large scale adoption, regulatory changes, and institutional involvement do not happen overnight. These processes move in phases, and each phase builds on the previous one, which means patience becomes one of the most important factors for anyone watching XRP at this stage. At the same time, the current environment is very different from what XRP has experienced in the past. Previously, uncertainty around regulation, especially due to the case involving Ripple and the US Securities and Exchange Commission, created hesitation across the market, but now there is a growing sense that clarity is slowly replacing that uncertainty. This shift alone can change how investors and institutions view XRP because markets respond strongly when risk starts to decrease. Another important factor is perception. For a long time, XRP was seen as an asset that was constantly facing challenges, but now the narrative is slowly shifting toward opportunity and potential. When perception changes, demand can follow. And when demand increases while supply remains relatively stable, price movement becomes more likely. But again, this does not happen instantly. It happens over time as confidence builds and more participants enter the market. It is also important to look at this situation from a broader perspective. The global financial system is evolving, and digital assets are becoming a bigger part of that evolution. Governments are exploring digital currencies, institutions are building crypto related infrastructure, and technology is improving at a rapid pace. XRP sits at the intersection of many of these developments because of its focus on cross border payments and financial efficiency. And if these trends continue, XRP could find itself in a very strong position compared to assets that rely purely on speculation. But with all of this potential, there are also risks that should not be ignored. Markets can be unpredictable, political outcomes are never guaranteed, and institutional strategies are not always visible to the public. Just because something seems likely does not mean it will happen exactly as expected. This is why it is important to stay balanced and avoid making decisions based purely on excitement or fear. Successful investors focus on understanding the situation clearly rather than reacting emotionally to headlines. What makes this moment unique is not just the possibility of growth, but the foundation that appears to be forming underneath that growth. Utility, regulation, and institutional interest are three pillars that can support long term value, and XRP is currently connected to all three of them in different ways. If these connections continue to strengthen, the long term outlook could change significantly. But if any of these factors weaken, the market could react in the opposite direction. So the real takeaway here is not that XRP is guaranteed to explode in price, but that it is entering a phase where its potential is being taken more seriously at a global level. This is the kind of phase where informed decisions matter the most because opportunities and risks both increase at the same time. Financial disclaimer: this content is for informational and educational purposes only and should not be considered financial advice. Cryptocurrency markets are highly volatile and involve significant risk, and prices can move up or down unexpectedly. Always do your own research, understand your financial situation, and consider consulting with a professional financial advisor before making any investment decisions. Never invest money that you cannot afford to lose, and remember that past performance does not guarantee future results.